Hi, good evening, everyone, and welcome to the Let's Talk About Market episode number 67. Uh, Today, if we see, there has been a good bounce in the Nifty Index, and overall as well, the breadth was pretty good. So, there were almost around three advances for one decline. So, that way, if we see, the breadth was very good. But what are the watching points? What are the upside levels to watch out for? What is the downside level to watch out for? And are we out of the woods? I think that is what the discussion will be for today. Definitely, there are some encouraging signs that we can see today, but are we out of the woods? The answer is possibly no. And what are the things to watch out for? I think that is what we'll discuss today. So let's get started. Let me quickly share my screen. If someone can please confirm if they are able to see my screen, please put it in the chat box. Okay, yeah, if you all are able to see my screen, just someone, if they can put it in the chat box so we can get started. Okay, thanks for the confirmation. So yeah, I mean, if we see the Nifty index, it's at an interesting point. The reason why I say that is because there has been a channel breakout. I mean, it is not a decisive breakout as such, but nevertheless, it is a breakout. So you can see over here that this upper end of the channel has been broken. So now, as I had mentioned, I mean, because this falling channel that will keep going lower every time. So over here, this was one of the important resistance, and the other one was 61.8% retracement of the entire decline, which is say somewhere around 26,000. So round figure, you take it as 26,100. So that will be the important levels now to watch out for on the way up. So yeah, I mean, we have crossed one hurdle. Now the next hurdle is somewhere around 26,100, which is what the Nifty index needs to conquer. I think if that happens, then we can be reasonably sure, that this is just a minor correction which is getting over, and we are possibly heading higher. Uh, Now, if we see many of the indices, okay, if you see the Bank Nifty index, that has bounced back from the lower end of the range, okay, and over there as well, there is some encouraging sign. In fact, the most encouraging sign was basically if you see mid cap, it closed mildly in positive. Okay, and what you see is long lower shadows, so that is a good sign. And in fact, even the 20 week was held. So in a way, now we have now looking at the chart, it seems like that this is a good base for the Nifty mid cap index. Okay, if this base breaks on the downside, then it will not be a good sign. But as long as it is holding above that, it is good. And also, what we have seen is a daily close above the 20-day SMA. Okay, so that is a good sign. By the way, for the Nifty index, that was not broken on the upside, the 20-day, but mid cap index has broken, and there has been a bullish crossover. Uh, Small cap, the RMI was already in buy, and over there as well, we have seen a bullish cross. I mean, a positive weekly close. So after a hammer, basically there is a long-legged doji that we have on the downside. That is again a good sign. Micro cap, again the highlight over here is that the lower end of the range is saved, and we have two dojis over here, so need to see the follow through. See, in all the cases, what is happening is that important support levels have been held for now. All we now need to see is follow through, and at some point, breaking above the 40-day exponential average. I think those, as and when they happen, that will be a very good sign. Even if you see 500, almost on the verge of giving a bullish crossover, but so far it is below the averages. Over here, if we draw the trend line, it would have broken this trend line. But in all these cases, we have seen that the follow through has been missing. So if on Monday's trading session, if we end up getting a follow through, that will be a very good sign. uh, the other thing, auto, which was looking like it might break down. So 40 day was broken yesterday, but today it has decisively come back, so that is again a good sign. So see, this is what I was telling, that over here, it had broken down. There was a meaningful pullback from the bottom, but there has been no follow through on the downside, and it has gone up. So this is good. PSU Bank, still hovering around that 20 day SMA. So even this needs to be broken decisively to get some confidence. But yes, mainly that is what we are seeing everywhere. Nice pullback towards the 20-day, and mostly most of them are sitting around the 20-day. So that needs to be broken decisively in order to get some momentum. Okay. So that is there. The concerns that I've highlighted, I mean, those still remain, but I think the way things are unfolding right now, it is better that we ignore the VIX as of now, till the time it does not spike. Okay, so till then, maybe just being with Nifty would be good. The moment the VIX starts rising, and in fact, even for Nifty index now, this becomes an important support level. Okay, so for Nifty index broadly, what I would say is that 25,700 on the downside and 26,100 on the upside. This is the broader range for the Nifty index as of now. Okay, once we get decisive break on either side, there will be some trending move that I am expecting, because I was just looking at India VIX. By the way, to all those who don't know, this might look like downward spikes. Wait, let me remove this. Okay, this might look like it has not hit the low reading, but if you see it on the line chart and a closing basis, this is the lowest ever, I think, India VIX that we have ever seen. So low VIX, and see, low VIX is not necessarily bad if the markets are trending higher, nicely. But so far the markets have been very sideways, and despite of that, the VIX is very down. That is a bit of a concern. So let's see, I mean, which way things unfold. We need to give it a time. We need to give it some time, and basically we need the levels to be broken on either side to take some judgment. Okay, at this point of time, there have been many many places where important levels are saved. For Nifty index, basically, this was the trend line where it was threatening to break. Let me just draw it. So this was the trend line that it was threatening to break. Even that has now been held, and it has come back above it, right? So in many of the indices, if I see, important levels are held, and that's where I think it is probably now getting a bit more stock specific, where we may want to look at. But I would still say that, I I don't know. I mean, this is just an inner feeling. Looking at VIX and the way things are. The other thing that, as I told you, I mean, yesterday also, that kind of bothers me is the RMI that is in sell. So while the 20-day is holding, and that is the good part. So if the 20-day breaks on the downside, then you might have some correction, consolidation, and you might expect the RMI to go back towards the zero line. In which case, we might end up seeing some time wasting factor. If not a big price wise correction. So this is the only thing. I mean, that's why, as I told you, I'm on the edge right now, and we need that decisive close either on the upside or on the downside to take some definitive call. Otherwise, it is just a dull and a boring market so far. With I mean, there is no direction at all. I mean, if if someone was trading literally on levels, maybe auto index would have made them nervous yesterday. right? But you can see that how sharply it has bounced back today. So that is where, I mean, the problem is that we are not getting follow through right now, and the range is getting very very narrow. But given that it is at a critical point, so each time either it goes up or goes down, it feels like, are we going to get a breakout, are we going to get a breakdown? But the reality is that we are neither getting a breakout nor we are getting breakdown. So need to be a little patient with that, and see which way things unfold. But I was looking at the setups. There are many many nice setups that are emerging, especially if you see on the daily chart. And as you all are aware, I have told in the past as well, that look for the stocks where the prices are above the averages. Okay, and for that, you just simply need to click. Okay, now see, when you have so many results, you can do further filtration by putting weekly into buy and new buy. Okay. Well, so what it does is that it will filter out some stocks. So from 198, that list has gone down to 36, right? Now, you can simply try and see. Now you see this Bank of Baroda, this has a good setup, right? I mean, it has pulled back, and it is trying to turn around. And it is into that PSU segment. If you see Bharat Forge, again up move, consolidation, trying to turn around, good sign. Bliss GVS, no. So yeah, I mean, ideally, these are the kind of setups that you might want to focus on, which are trading above the averages, because those are the ones, which have sort of proven that they are in an uptrend right now. And what we have seen is just a consolidation. So even if the market doesn't do anything or it remains sideways, these are the stocks that are very likely to outperform. So yeah, so this is the space. I mean, you can go to the scanner, apply all those filters, and try to find out those stocks. The moment where you have to be a little cautious, or think that maybe in the short term the up move is done, is when the daily swing tries to again come back towards the upper zone, or the average swing goes to around these levels. So these are the levels where uh, you might want to be a little careful, especially in the near term. Okay, I mean, as you all are aware, this is very very short term indicator. So that's where you need to be careful. Right now we are in the middle. So if at all, say for example, even if Nifty index does not rally and there is a overall breadth that is good, so there is a good chance that Nifty, despite not breaking about 25.6, I mean 26,100, you can get swing at 80-90 levels. So that's where you need to be careful. Okay, because see, this is what had happened over here, right? This was the decline for which it had nearly retraced 61.8%. And in this 2 to 3 days pullback, we ended up getting the daily swing towards 80, and from there we got a minor correction, right? So such things can happen. I mean, given that we are in a very tight range and in a very narrow market, so this can go up and down within 2 to 3 days as well. So just keep an eye on that. This will help you to manage your risk. But yeah, I mean, as I mentioned, if at all your stance is bullish, look out for those stocks where the RMI signal is in the bullish mode, and the stocks that are trading above. So, if I do this, you buy or buy. So yeah, in this, I don't know. Let me see if there are any other. So you see something like M&M Finance, Infi, you can ignore things like this. The ones which are not giving the bullish crossover, where the RMI is not gone back to the zero. Those are the ones that you might want to just avoid. But the ones which have seen decent pullback are the ones where you might want to concentrate more on. Mid cap, as I told you, I mean, it is giving a bullish crossover. very few stocks actually, which this is this is also a nice pattern, as you can see. I mean, while it has not touched the 40, but the bands have been squeezed, and it has seen a meaningful decline in RMI, almost coming back to zero line. So these are the stocks that you might want to focus more on, because that's where probably you might end up getting opportunity. G1, Small Finance Bank, Voltam. So yeah. So these are the case, and see, as I told you, I mean, watch out for those short term indications, even in diffusion. If at all you get percentage of stock above RMI by around these levels, then be a little careful. Okay. So yeah, I mean, most of them, they are all around the midpoint, so nothing to worry as of now. In fact, the percentage of stock about 20 SMA for small cap has just started to recover. Mid cap, I mean, in Nifty 50, it is in around the midpoint. So none of these indicators are neither on extreme side, nor on the upside, nor on the downside. So as of now, you all can play with the levels that I've mentioned in the Nifty index. But if at all those levels don't break, and the other index, I mean, all this other sentiment indices, if they come into overbought or oversold zone, so then that's where probably you might want to take some action, because that's where the risk reward will be in your favor. So yeah, I mean, broadly, that is it from my side. Unfortunately, in the past 2 to 3 days, there is not much to talk about, because we are in a very narrow range. But yeah, I would definitely say one thing, that keep checking the insider trades. Okay, I mean, that is where you might end up getting some good this thing as well, some good insights that y'all might end up getting. So keep tracking those things, and in fact, even if y'all end up seeing something interesting, please do highlight when we are doing this live show, because there are a lot of things that that are there to track. I might end up missing some of them. So so yeah, I mean, please, if at all y'all also see some good observations, then please highlight over here. So yeah, I think that's it from my side. If you'll have any questions, if there is anything that you want to understand, please let me know. I'll be happy to clarify it. Small cap RMI indicator. Uh, Small cap, as I told you, right? There is a bullish crossover that we are seeing. So if I do over here, Nifty small cap, it is already, in fact, in bullish mode. Okay, and now it is just trying to gain some momentum. So 20 days, the near term hurdle. Once that breaks out on the upside, 40-day exponential average is what will be the level to watch out for. So yeah, I mean, these are the two levels, and ideally, since the RMI is in bullish zone, and the 20-day breaks, then you might at least expect the RMI to go back towards the zero line, and then is where you might want to be a little more neutral. But as of now, it seems like there is some room of upside that is left in the small cap, at least in the very near term. And the mood can turn bullish once this 40-day exponential average breaks on the upside. That is because even by then, I think the trend line might also break on the upside. Okay, no, so trend line resistance is a little higher. Mm, to Even if I take this, so yeah, it is a little higher. But yeah, I mean, we'll go level by level. So as of now, 20-day and 40-day exponential average, which is like 300-400 points away from current level. So these are the upside levels, to watch out for. Any other questions? I'll wait for a minute. If there are no questions, then we can, uh, end the session for today and we can meet on Monday. But yeah, the key highlights is that, in a lot of sectors and indices, we have seen a doji on the weekly chart, especially, finding support at the lower levels. So this makes the near term lows in all these indices very important. So as long as that does not break, the bias would be, at least in the near term, that they rise higher. Uh, yeah, Rupani, I don't want to, get into stock specific. You know, if we talk more about the broader indices, or conceptually, if you want to know anything, I would be more than happy to, let you know. Suryakant says how to understand the sentiment right now, uh, for the FI's positioning. So, see, good question. I mean, the sentiments have been in extreme zone for quite some time now. But see, the way I would put this is that if you see in the past many times, especially after 2018, where DIs became a lot more relevant because of the kind of flows that they get and the investment that was happening. So if you see over here, usually a medium to long term bottoms are made when the DIs are net long, okay, and net long to the extent of more than 50,000 contracts or so. That's where you end up seeing this. Uh, Similarly, you see it over here. This was accompanied by a bottom over here, bottom, okay, over here. It was a bottom, okay, over here. Okay, this was an extreme level, but here you saw bottom, and now somewhere we are seeing this over here as well. So while it may look like that, the market is at an all time high, but if you see, based on sentiment, there is still a lot of pessimism that is there. This similar thing is happening in FIIs as well. I mean, if you see FIIs, so you can see that when their positioning is towards the lower end of the range. Now there is one caveat over here which I'll share with you. But you can see that broadly, whenever their position was towards the lower end of this line, okay, this orange line, there used to be a bottom, right? If you see over here, bottom here, bottom here, bottom over here, it used to perfectly touch those lines and then it used to turn around. Now, what has happened is that after this tariff, I mean, Trump coming into play and, tariffs and all happening, there, I mean, this was the lowest reading, by the way, which we saw in the month of Feb 2025. Okay. It had touched almost around 2 lakh contracts. So earlier, what used to happen was that somewhere around 1 lakh 10,000, 1 lakh 15,000 or so, a bottom used to be made. But now, the bigger question, I mean, for that, frankly, I have no answer. Is this the range change that we are seeing? Where this becomes an extreme and this becomes the lower extreme, and we end up getting bounced. Frankly, I have no answer for that as of now. But broadly, looking at the chart and looking at the entire past history that we have, you can safely say that the sentiments are more on the bearish side at this point of time, and usually this indicator works as a very good contra bets. So that is why I have been saying that wait for the breakout to happen, okay, because if we put a bar chart over here, so somewhere around 26,300 is where we need to see a breakout. I think once we end up seeing that breakout, I would suspect that there is good 10-15% kind of move that is very, very likely on the index. But until that does not happen, it is wise to wait and watch, okay. And of course, I mean, this is probably the time where you have to do a lot more study of the stocks. Maybe try to know them fundamentally and whatever it is, or keep them on your watch list. But I think a lot better move is likely to come by in probably say 5 to 6 months. the even yesterday, like I mentioned, the only question I am having at this point is that, do we turn around from here directly, or do we end up getting a correction, and where this positioning again goes to extreme and then it turns around? So that is the question that, for which I'm not getting an answer at this point. Probably a break about 26,100, or a break below 25,700 will give us some clarity, I would imagine. But yeah, I mean, that is how broadly, you would like to see the FIS data. So mainly FIIs, when they reach a net short of 1 lakh 20 to 2 lakh thousand, I mean 2 lakh contracts, that's where you probably can expect a turnaround on the bullish side. Similarly, if the FIs are extremely long, okay, and they are long, say to the extent of somewhere around 45,000 to 30,000 contracts, that's where you can expect a good rally eventually to play out. Because when the up move happens a lot, they usually become net short, okay, and they go down to the other extreme. So that is where we are at. I mean, when we look at the sentiment, it's all telling us that the sentiment still is very bearish. So yeah, I mean, that is what I mean, that is how we are reading into the FIs and the DI data. I hope that clarifies your question, Suryakant. uh, are there any other questions? And I think I can't see any more questions. So, anyways, happy weekend, and let's meet on Monday and see if we get, the range breakout that is much awaited. So let's catch up on Monday. See you till then.